Hi, this is Mike Lembeck with Remax Commercial, bringing you today's Let's Talk About It. Today we have three articles I want to review. I think you'll find them all interesting, giving you a better idea and more in-depth analysis on what investors are doing with today's market. So let's get started. All right, today's article, our first article, is titled "High Interest Rates Stymie Apartment Investment." And in this article, we've got the following text. Few are executing new deals amid uncertainty about how high rates will go, what properties are worth, how much rents and operating costs will grow, and whether a recession is coming. Higher interest rates have shocked apartment investors. Many seem uncertain what to do next. This is the big reason why we don't have a lot of activity and the sales are pulled back quite a bit. It's not only just because of the interest rates, but just because there's a lot of uncertainty on what's going to happen with our market, interest rates, inflation, what are rents going to do. I think rents are going to continue to increase, just not as dramatically as we've seen in the past. Potentially we could have some additional rent control laws that are coming out with some of the cities. Santa Ana's got a lawsuit going now on to fight their rent control laws that they're implementing. The association, Orange County Apartment Association, has filed a lawsuit against that to try and stop that from occurring. So we've got some things going that potentially could increase, allow owners to increase rents and keep up with inflation and not have to be governed by some of the cities. Potentially also some of the additional cities may wait to see what happens with this lawsuit and then kind of do what they want to do according to the final outcome of that lawsuit. And so that remains to be seen on how that what happens there. The next part of the article states the level of activity across the board is lower than it has been in quite some time. When markets are in a bit of a turmoil, that slows things down. So, again, more uncertainty, slowing things down, and people just feel like let's wait and see what's happening. Also in the article, we've got no wonder so many apartment investors seem to be hiding under their desk. So that's kind of funny because they're hiding to wait to see what happens and then they'll take appropriate action after that. Also in the article, there was current Fed posturing is that they'll raise the Fed funds rate to 5% and hold it there this year. That's what's anticipated, but with the recent slight decline in inflation, just a 6.4 from 6.5%. I don't see them just waiting and seeing what happens. I think they're potentially now. I'm seeing that they may do, instead of a quarter point increase next time, go as high as a full half a point. So we'll see if they start bumping those increases back up to half a point, like they were earlier this year or late last year when they did it a 0.75% increase, and maybe they have to be a little bit more aggressive. So we'll wait and see. All right, and our next article is titled "Investors Are Fleeing the Home Buying Market. The fourth quarter saw the biggest slump since the pandemic," according to Redfin. So we've had a dramatic increase in or decrease in sales that started partially in the second half of last year, and now in the first part of this year, the first couple of months, we've got a little bit of an indication of how 2023 is going to shape up. So also in the article, investors seek a clear picture. The steep decline in investor demand for housing stems from the fact that interest rates more than doubled in less than 9 months in 2022, and pricing across the country is being called into question. Values are dropping. They've come down anywhere from 7 to 10% locally here in Southern California. That's not only for single family, but I think for the multifamily market, it may be a little bit less than that. We're seeing less declines, and of course, certain areas are being affected by it more so than others. Coastal areas are holding their value as they typically do, a little bit stronger than some of the inland markets. The article goes on to say such a drastic change in the market will drive capital to the sidelines until investors can have a clear picture of what the new interest rate environment will be and what the real impact this will have on pricing. which the latter has yet to be determined in most markets in the country. So again, it's validating what I had just said, that the things are being affected differently in different parts of not only Southern California but in the country. With no moderation in sight, combined with rising construction costs, we could be in for a long runway of declining home sales throughout the entire year. So this could be 2023. We could have pretty significant declines in value, maybe just over in this year, anywhere between 5 to 10%, depending on location. Until the Fed starts cutting rates, which lead to mortgage rates coming down significantly, it will continue to benefit the rental products on the market. That's good news for renters or for property owners on rental property, that rents continue to increase. Indeed, the rental market remains strong as homeowners locked into low interest rates are holding on to their prior properties and converting them to rentals. So what we're seeing is the homeowners who either had a second home or maybe have sold their or moved into a second purchase of a different home. They've kept their previously owned home and now turned it into a rental because they're seeing that the values of rent is increasing, and their net on the property is going to be overall in a better position if they just hold on to it, if they're in the position to be able to do so and they don't need the equity from that home to be able to purchase their new home. All right, in the next article, what we have is near record amounts of idle capital could boost sales this year. Value add, opportunistic, and debt capital look to be the most active. What we're seeing there is value add is really the biggest investment part of the market right now. A lot of investors are looking for something that they can increase the value, maybe potentially hold the property until we get through this cycle of interest rate increases, let things settle down a little bit, see where values go, see what rents do, and then just basically build value in the property or build equity by adding, doing improvements, cutting expenses, and any of the value add repositioning that the property might need. Also, it says that the near record amounts of capital are sitting idly on the sidelines amid economic uncertainty, and how quickly it's deployed this year will be major factors in overall sales volume. So again, how many people are going to wait on the sidelines, for how long, and then when it comes time to deploy the capital that they have, how much are they going to invest? In the new report, the firm says that the value add, opportunistic, and debt capital look to be the most active, with debt plays yielding equity-like returns. Liquidity can be found, but from different sources. The report notes investors are turning to defensive strategies, with multifamily and industrial garnering the most activity as safe harbors due to strong fundamentals and durable cash flows. This has been the case for most of last year and even in 2021, where we saw the multifamily and the industrial markets being the strongest markets available for investors to invest their funds. Grocery-anchored retail is also expected to remain resilient, while luxury hotels have posted incredible fundamentals. And as for office, trophy properties are vastly outperforming all others. So a lot of the trophy properties seem to be doing well. As far as some of the other maybe B and C areas or B and C type buildings, they're not holding their value as well. Their occupancy is down. Some of the office buildings potentially could go into foreclosure. We may see a lot of commercial properties going into foreclosure this year as we move through the year. It remains to be seen how many of these, what happens with those and how many foreclosures we see. So it's a good thing to keep an eye on to get a good read on what the overall market is doing in general. So hopefully you got some good information from these articles, and it gives you an idea of what the market's doing and how you should proceed with your own investments. And feel free to reach out to me at any time on anything you might need that I might be able to assist you in some of your investments, any questions that you might have. So I look forward to hearing from you, and we'll talk soon. Take care and have a great day.